Welcome to my program, Journey to Great Business. My name is Rajiv Jaiswal and I'm a business consultant. And I have put together this series of videos called Journey to Great Business that help you improve your business and make it great. So, today I'm going to talk to you about one very important thing that we often neglect in our businesses, that is, how to reduce receivables. Now, receivables are a very important part of business, and as you know, no sale is completed until and unless the payment is received. Many companies that I have seen leave the recovery process to the sales team, but this has its advantages and disadvantages. Many times, when a salesperson goes and asks for the accounts, when they ask for the payment, the accountant, on the other hand, says, I don't have the full statement, or I need to know how much money I've paid, or how much is due. Sometimes the person doesn't even know that there is some money due. So it leaves the salesperson at a loss. He connects with the company, and the whole process of getting the payment is delayed because many times the salesperson goes and asks for the money when he reaches the client, not on phone. Sometimes what happens is that large percentage of the money is collected, but a small percentage is left. 5%, 3%, 2% is left. And in the whole big picture, in the process of running for new business, the this small percentage of money does not get collected. And poor collections are a real big source of low profitability and poor cash flow, because ultimately every drop of water is needed in today's world to fill the tank. So let me explain to you. Suppose you had made an invoice of 100,000 rupees or 1 lakh rupees, and you operate at a margin of 10%. Your net profit is 10,000 rupees. Now, if you receive a payment of 97,000 rupees, which means the bulk of payment has been received, and only 3,000 rupees is left as a payment, and it's unrecovered because we think we do not remember it because it's a very, very small amount. Then what happens? And since you're operating at a 10% margin, do you know how much business you need to get to recover this 3,000 rupees that you've lost? You will need to have at least 30,000 rupees worth of business in order to recover this 3,000 rupee loss that you've had in your business. And also understand, you're operating at 10%. When if you don't collect this 3%, your profit margin has gone down to 7%, which means you're actually operating at 70% of the profit that you should have operated on. Now, what is it that we know? So, ideally, we should focus on receivables, ensure that we don't overlook any small payment, and therefore improve our profitability and cash flow. So, there are two things that you need to do really in order to improve your cash flow or improve your reduce your accounts receivables. First thing is to make a list of outstanding payments along with aging, and the second is to use a follow-up process, which I will just explain to you how you can make an effective follow-up process in order to ensure that your money is collected on time. So what is an aging? What is aging? What is the aging report that we want to make? Aging means that you at every certain period of time, at every regular interval, you make a report that characterizes how many days a particular amount has been outstanding, an invoice has not been paid for, what is the length of time that the money for a particular invoice remains outstanding. We start from the date at which it is invoiced, and we calculate till the date when the full payment has been received, not part payments. Because ultimately, what is our objective? Our objective is to collect even that small amount of payment that's left outstanding against the invoice. So this is what an aging report looks like. So if you see right on top, there is a status date, which means that you have actually calculated the outstanding customer wise on that particular date, right? And here you have the names of all the customers that you have against whom some invoices have been raised. Then you also have the billing date, the date on which the invoice was originally raised. What was the date of that invoice? You can have the what is the total amount of, what is the value of the invoice that you have raised on the customer. The last receipt date is the date on which the last and full and final payment of the particular invoice has been made. So that, and when this payment is received, there is no outstanding left against the invoice. This is the total invoice amount received. So if, let's say for example, in the first case the total invoice value was 4.43 lakhs, we have only received 4 lakhs. That means 43,000 rupees is still outstanding. So the amount that we have received, 4 lakhs, that's what we are going to mention over here. This is the number of days in which, for which this amount is outstanding. So if, let's say even if you have 43,000 remaining outstanding, then it's remaining outstanding for these number of days. This also tells us when a payment has been received. So let's say for example, in the case of customer 6, the initial billing was done on the 25th of June. We received the last payment on 10th of July. That means this full and final bill was paid in 15 days. So this also gives you that. This tells you whether the invoice is actually still due or it has been paid by the customer. Then this is the number, this is the periods at which for your business you can customize, which means that I have taken that. First, we are looking at invoices that are paid in less than 8 days. Then there are invoices that are paid between 8 and 21 days. Then we have 22 to 45 days and more than 45 days. Now, based on your industry and based on your the practice that is followed by your company, you can have different slabs over here to bring the payments according to that. And a very important thing is you can also add the salesperson name over here. When you add the salesperson name over here, you know, if you have a sales team follow up, you know who is responsible for this payment, and if your finance has to ask, whom they should ask. Even then you can also sort this whole list. This is made in Excel. You can sort this whole list by customer name, which means you will have, if a customer has multiple invoices that are outstanding, you will come to know what are the various invoices and for how many days they are invoiced. Normally customers keep on giving you part payments and they say हमने payment तो कर दी है, अभी कल ही तो करी है, आपको 20,000 रुपए की payment या 2 लाख रुपए की payment. You can always check from here which are the invoices that have been paid and which are the invoices that are still pending, especially from the number of days point of view. You can also know, if you sort by salesperson, customer name and salesperson, you will know what all invoices have to be followed up by this particular salesperson. He may be following up multiple clients and you will get to know all his clients over here in one place without actually having to go through your accounts receivables book. And interestingly, at the bottom, if you see, you can get the average aging and the average due. Average aging is how many days is it taking on this particular date, on 10th of July 21. How many days has it taken on an average for you to receive your payments and how many days it is still due, right? So you can control what is your due program. Now this report actually, so what is happening is you've seen that this report is showing you customer wise amounts that are due under each period. It's showing you the number of days before your full payment is received. It's also showing you the salesperson associated and the average number of days in which the bills are being paid or are not paid. So it's a very important report. It helps you to do many things, and especially it helps you to understand the financial health of your customers, not your own financial health. Remember, it is used to understand the financial health of your customer. If your customer is paying you every time more and more late, right, you can understand that the financial health of the customer is going down. If the customer is paying you more and more number of times on time, you know that your customer is in good financial health and you should continue to deal with this person. The other thing that this report does is it allows you to have differential pricing for those clients who pay on time and those clients who do not pay on time. Now I know from gut feel, from our instinct, we know which are the customers who are paying on time and which are not those customers who are paying on time. But it does two things. First is it gives us some data on the basis of which we can actually talk to our clients and say, look, this is your payment history. And this is why we would like to give you this price, right? It also tells you, it also allows you to look at your credit risk. If your customer is paying you later and later, you might find that there is some money on credit risk, and you can account for that, and make sure that you don't lose the money that you are giving to your customers on credit. Then comes the follow-up process. So first is whenever we have to look at receivables, we make this aging report, and then there is the follow-up process. How do we use this aging report in order to have a great follow-up process? So now once that we have this report, we have to start looking at the receivables. So let us sort this report on the receivables, right? So we sorted on the amounts that have been outstanding for the longest period of time, because those are the ones that are the biggest risk. If your payment is getting delayed more and more, or if you have not realized that there is some outstanding, you really need to focus on that, because the current payments usually get paid. They are not so much at risk. So sort your report on the amounts that have been outstanding for the longest period of time. And within that report, make sure that the amounts that are the highest stay on top and progressively go down to the smallest. So that when you look at the list, you look at the one amount that is outstanding for the longest and has the highest value, because that is going to have the biggest impact on your cash flow, profitability, and your credit risk, right? So if you do this, this is what your report will look like. The same report that was there earlier, you will see that if you look at the days, which is more than 45 days, there is that amount has come on top. And if you look at the second column, which is 22 to 45 days, right, you will see that the amount of 1,40,000 is on top, and the amount of 43,000 is below that, which means that when we actually start following up, we know what to focus on and which is the one that has the greater priority, right? Now, what do you do once you've sorted this information out? What do? You pick up the phone and start calling your customers that have the largest outstanding on the longest duration, and call them first and say, sir, you have had an outstanding for so many number of days. This is the invoice, this is the data that you have. Can you please pay it? This is the amount outstanding from you. Now the client can say a couple of things. Client can say, okay, I'll pay you tomorrow, day after today, or whatever. Please make a note on that sheet that yes, the client has said, and I will pay you on the in 3 days time. Make a note of it on that, and on the third day, call the client and remind him and say, sir, we had spoken 3 days ago. You said that you would pay in 3 days time. Can I expect the payment today? What happens is that in the day, in the humdrum run, we tend to forget to remind the client after 3 days when he had said so, and he forgets. He also forgets because he's also busy about with something else, and our money does not come. Sometimes what happens is the client says, I don't have the account details, I don't have a reconciliation, I don't know how much money do I actually owe you. What is my actual account statement? Can you send me that? So make sure that the account statement is sent immediately. And the third thing that he can say is that the contract has not been completed because of A, B, C, D, E reason, then we need to do that. Now, in order to follow up all this payment, I would suggest that instead of leaving it to a salesperson, have one person in finance or accounts who takes out this list every week and starts from the top of the list and calls each client down all the way down their accounts department, and starts calling them for the payment. The reason for that is that the accounts has all the information. They have the aging report. They also have the ability to send an account statement immediately, quickly to a customer. They also have the ability to know whether the payment has actually come or not. And if a contract is not completed, they can always escalate this whole program to the salesperson, so that the salesperson gets the completion, gives it to them, and follows up the payment. Now, when I say the finance people or the accounts people have to follow up, it's not does not mean that the salespeople don't do anything at all. The salespeople are also at the front end, but the salespeople have their sales calls to make. They have got multiple clients to go to. They are traveling. They're sometimes on the road. They do not have the ability to do that. So this should be done in conjunction, but led by the accounts team. If you do this, you will find that the clients will not have any reason for them to say, I don't have information, or I told you that I would pay, but now since you didn't remind me, my payment has been committed somewhere else. Now you have to wait for another certain number of days. It will help you to get your payments on time. And once you've done that, go down the list to all your customers until you come to the end of the page. And at the end of the week, what have you done? At the end of the week, remake this outstanding statement, and it will reflect to you all the payments that you have collected. Transfer all the information that had you have written that the client has committed to pay on so and so date to the new report, and continue the follow up. This way, every week you will have a definite amount of collection in your bank, and it will help you to improve your profitability. Now, what is the objective of doing this? First is that we have to find ways and means to reduce the average number of days our payment is due. If the and it's not going to become from whatever it is today to a very low number immediately, but we have to focus it. Right now what happens is we just follow up for payment and we maybe leave it. We don't measure how many days the payment is actually outstanding. If we do that, then what is going to happen is that our payment collection system will improve. We will have more money. And the other objective is that when we know that our payments are getting late, let's enact some policies that will help us to get our payments upfront. Like for example, people give cash discounts, people give incentives for payment on within 7 days, within 15 days. If you have to look at that whether it is worthwhile in your case, and what is the best way to do it in your case, and for what duration of payment, for what duration of days should you do that. Make policies that will help you to bring your company's outstanding value down. The lower the number of days that your payment is outstanding, the more cash rich your company is going to be, the more uh, profitable the company is going to be. Now, the idea is that when we do this aging report and when we look at the data, it also gives us the ability to identify when the problem is happening. It doesn't mean that you come to know after 3 months. Suddenly, you will find in the middle that the number of days outstanding has gone up from, let's say, if it was earlier 30 days, it has suddenly gone up to 37 days, 38 days, 40 days. Now you need to know why it's going up so that you can take the corrective measures right on time and make sure that this is not going to become a default payment, right? And also when you're looking at these on a regular basis and you're looking at analyzing each customer and seeing what is the average number of days that my customer paying, is he paying in the scheduled and agreed payment dates, is he paying in the scheduled and payment times, then we will know what is the quality of customers. Do I continue with this customer? Do I change his pricing for this customer? Do I drop this customer? Or maybe some of your really good customers who are really paying you well on time, can I give him some incentive to stay with me and yet pay me on time? Right? So by looking at these, I can also decide what kind of pricing I want to give to customers. So the receivables program is not just about getting your receivables, it is also about creating the right strategy for the growth of the business, for the improved cash flow and the profitability of the business. So ideally speaking, this is the bottom of the chart where we have looking at the number of days due and the number of average days outstanding is something that you should look at. You can translate this and use them in the form of graphs so that a graph will show you what exactly is happening. So if something is going to happen, if you see over here, suddenly in the trend, there has been an upward graph growth. So you will come to know that something has happened here, and maybe you can analyze it. And visually also you can see if the line is steady or if the line is going downwards. You know that your policies, your systems, your measurements are having an impact, and the number of days outstanding of your payment is going down. So I hope that you have been able to understand the whole program, or the whole process of finding receivables. And thank you for listening to my program, Journey to Great Business. I will keep recording more videos. If you like, you can subscribe, or you can put the connect the bell icon so that you get notified, and definitely put comments so that I can answer